Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, January 7th. Okay, let's dive right into it. Starting with the SPY daily chart. We can see yesterday that SPY did successfully hold the 20 EMA and actually recaptured this rising wedge that we had going. I don't see any reason to change the approach that we've taken over the last several days, and that is just keying off the 20 and not getting too rattled or concerned with fluctuations above that. If things start to fall apart and we drop back down this, drop back below this wedge and drop below the 20 EMA, there's one last level here at 366, and we'll see it on the shorter time frames. But even there, we've got this high volume over price support bar right here. I would imagine, unless there's just a real bad sell day, that would hold initially and be able to, that would be a location to try an objective long with a short or with a stop just below. But then if it lost 366, we would come right back down to the 50 EMA, and then we'd be looking at lower levels. So, but for right now, I think SPY is fine for daily swing traders above the 20 EMA. Now, here's the 2-hour chart. You can see that we still have waning momentum and waning RSI. So those negative divergences, those bearish divergences that we've had in place really the whole time remain in place. So that's a yellow flag that we need to be aware of, but it's not a sell signal. So if you're more of an active trader, here's your longer time frame. You can see that 371 is a little shelf of support here. But if we were to lose 371, we're going to come back down to 367, which was the low from the other day. So this would be a location, 371. I regard that as the 2-hour pivot. Anything above that keeps the chart bullish, but if you were to drop below, get a 2-hour close below 371, I think you're going to come down here to 367, $4 lower, which is a decent trade all in itself. 30-minute chart. Right here at the prior high is a level here at 374. On the 30-minute time frame, we closed below. So this morning, on a break and recapture above 374, I think you can be long for active trading. And then see if you get a push back up towards 375, which was the high of the other day. So right here, I think if price is below, I think you want to be bearish, because look what happened. And this is just, let's walk through yesterday's trade. We opened way down here, right? It was all red. But then when we recaptured 371, that was your objective buy. Why? Because it was a well-defined level. Support, broken support becomes resistance, and then back below resistance. So coming back up, recapturing that level, 371 becomes support, and that's your objective buy with a stop just below. And then we advanced further to the top of the box. We recaptured that level. So that was another objective buying location that, even if you missed this one, you could have bought here or added to your position. And then we took out the prior high, another objective buying location. You know, it's getting long in the tooth at that point, but it was still objective. You could have topped off your position, and then we finally peaked and then rolled over in the afternoon, and then that's where you would have been stopped out right here. And then even, you know, if you're still actively trading at that point, you could have gotten short at this, you know, 375 level and got another $1 or so out of it. So this morning, active trading, key off of 374. If you break above, I think you can be long with a stop below. And if below 374, I think you can be short. Qs. Flirting right here with the 20 EMA. Notice bearish divergences, rising prices, falling momentum, falling RSI. Tech needs to hold this 20 right in here at 307.50. If it can't, it's going to come down here to 302.5, and probably most likely a tag of the 50, where I would anticipate at least an initial bounce, and then we'll see what happens. 2-hour chart, interesting day. We talked about yesterday, be ready for that gap fill higher. Very common technical move, and that's what happened. So this was Monday, the sell-off. Tuesday, they ramped up to this well-defined level at 312, where it failed. Wednesday morning, gap down, recovered this 307.50, and then filled the gap, and then failed again at 312, right back to this 307.50 level. So today, 307.50 is your pivot. Anything above, you can be long. Anything below, you can be short, with a stop above, looking for a move down to, that 303, 302.50 zone down below. Moving down to the 30-minute chart, I wanted to show this to you just for learning purposes. This was the gap down yesterday morning. We came down to retag the low of Monday. And we said, again, watch for the gap fill higher. If you were a little intimidated by that open, here was your objective buy on the recapture of 308. Then it gave you 3 strong bars, hour and a half of trading, up to this 312 level, where look at all the reach up wicks to almost get to 312 and then get rejected. That would be a visual cue, and we were talking about this in the trading room. Did not have the horsepower to jump up into this next level with that resistance there at 312. Now, that would have been your cue to close out your long on all these attempts. Buy the recapture and then sell resistance. And then if you got short, you got the ride back down. So there was $8 of travel there. Of course, you don't know that when you're trading. This is all, hindsight mirror stuff. But when you see multiple candles keep tagging that level and getting rejected, it's going to be a very objective trade to short against 312 with a stop above. Now, what I did was I bought some 311 puts for Friday with a stop just above 312. And I did that in this 1150 area. So, that worked out well. I still have them open, and I'll show you the open position report at the end of the video. But today, same game plan. If it can recapture 308, you can be long. As long as it's below, you can stay short for a potential run back down to retest these lows at 306. IWM, gap higher. I put a support level at the bottom of this candle, which is the top of the gap, and I think you can stay long against that. IWM had the outperformance yesterday. Really, the last 2 days has really rocketed higher. $10 in 2 days, 195 to 205. That's a bold move. 2-hour chart. Here's your gap at 199. If you're not in IWM and you were to get a pullback into 199, that would be your objective long with a stop just below. And if you're taken out, then that gap will fill. But I think you got to play the long side on IWM unless you're, really nimble and you can, navigate the ins and outs. But I think the bulls are definitely in control, and I would be looking for entry points long more than I would, counting on it rolling over. Here's the 30-minute chart. And what I did here was I put on the fibs at the swing low. So from 191 to this, 207 area. So we could get a 50% halfback entry back into this 199. And I think that would be, an awesome entry. And with your stop just below inside the gap. And then, if you get stopped out, I would flip immediately bearish just for the gap fill. And then down here, this 196.50, I think would be another objective long entry point. Moving on to FANG real quick. It's just not happening here, folks. So as we go through these, I'm going to point out RSI has moved in the bearish regime. Same for PPO. Downtrend in place. Failed at resistance for all intents and purposes. And now I would be looking for places to fade. Facebook, if you got to move into 266 that stalled, I would be looking for that to come back down to retag 260. And then if that were to fail, 255. But the bears are in control of Facebook and the rest of the FANG names. So let's move on to Apple. This would have been a nice trade yesterday. I didn't take it, but it's one we talked about in the morning video. They gapped it down. We talked about the recapture of the levels and the gap fill higher, and we had identified this 131 as a key resistance point, and it failed right there and rolled right back over to the open down at 126.25. Now today, as long as it holds 126.25, there's an opportunity for another bounce. But if that breaks, I think you got $3 of downside here down to 123.50, and that will be another support zone down here. So on a break of yesterday's low or a rejection at one of these resistance levels, that would be my target down here at 123.50. Tesla, no problem. Gap higher. Came back to test the top of the gap in the afternoon, and it held. So I think you can stay long against 749 at the top of the gap. And if it were to lose that level, then, a gap fill down to 735. And that would be a level that would definitely be an objective long if you're looking for an entry into Tesla. Microsoft, again, bearish RSI, bearish momentum. Here was your open yesterday down at 212. Didn't quite fill the gap, but ran into trouble at downtrend resistance and then rolled right back over to 212. So again, today, 212 is your pivot. Anything above, you can be long, but I would be looking to cover that long up into downtrend resistance and then flipping short against the downtrend line and looking for that to roll back over. Below 212, target's 209, and then we've got a $3.50 gap below down to 205.50. So there's more room on the downside for Microsoft if it can't hold 212. Amazon, I went ahead just to show you this bear flag setup. First leg down into 31.50, which held. Bear flag, and then here's your measured move down to 30.40. Here was your open yesterday down at 31.30. Made a move higher. And we had called this out in the trading room. I didn't take it, but there's at least a couple real active Amazon traders in the trading room. And we had identified that 3,200 level. If you notice, there were three hourly candles that reached up to 3,200 and were rejected. So getting short against 3,200 was a really objective level, and then got the rollover all the way back down to the opening price at 31.30. So there was your $60 or $70 trade, which worked out great. So today, I'd key off at 31.30. If it breaks yesterday's low, we're going to come down to 3,100, and I would imagine down in here to 30.60, 30.50, and even down towards 30.30, which is the measured move of that big bear flag. Google really didn't do much yesterday. I mean, it came up, filled its opening gap, rejected at downtrend resistance, and managed to hold 1720. That's a great location for your pivot. These names have been really weak. I mean, look, RSI, negative, PPO, negative, well-defined trend line, below 1720. I think you got a fast $20 down to 1,700, but then below 1,700, there's a gap all the way to 1645. So even if you're not a super active Google trader, which is the camp I'm in, I dabbled in it over here and got some pretty nice moves, but then, got stopped out in this mess on this fake breakout. But anyways, I have 1,700 alarmed, and if there's a break below that, I want to get on board for a gap fill move down to 1645. And I think that would happen relatively quickly. And if you look at the measured move, off of a big descending triangle, it could even go a lot lower than 1645 based on the measured move of a descending triangle breakdown. So I have 1700 alarmed. Netflix, bad day at the office. Gap down. Only got up to this 512 area. Wasn't able to fill the gap, so there's a $7 gap above. Rolled over again down to 500. Use yesterday's low as your pivot. If it loses 500, coming down to 494, which was an important level, and then if it loses 494, you're coming down another 15 bucks to 477, which was the level way back here. You can see all the reactions, and you can see all the reactions here at 494 where that acted as good support. So and you've got a steep downtrend line here. Again, bearish PPO, bearish RSI. No reason to get, all bulled up or look for a reversal, not until price can prove that it can take out this downtrend resistance. Then you may have an opportunity to get long against that for a gap fill up to here if FANG strengthens. Okay, option activity. GM. I just did a quick draw on the chart. GM has not been a name that I've been following very closely, but now I'm paying attention to it. Had a big run off of this 29 area at the 200 a couple months ago. Actually, all the way, back in October. Had a nice run up here to 47. It's had a gentle pullback. Notice the PPO. Rolled over. Came down to the 0 line where it is resetting. RSI came down, came into that 40 area and recaptured 50 on the way back up. This right here, the reset at the 0 line, is a really strong bull signal. Gentle pullback, curling at the 0 line, ready to reaccelerate. We got a breakout of the downtrend line, and if I can find it here, let me show you. Here is the option chain. Yesterday there was 3x call buying, 3 times normal call buying, and most of the traffic was centered on March 50s. So they're looking out 3 months, and let's see, where was price? Let's see. So we're at 43 right now. So they're looking out into March and looking for price to take out 50. A lot of open interest at the 45s. 37,000 open at 50 and 36,000 open at 55. So real strong institutional call buying yesterday in GM. I like the technical setup with PPO curling, breakout of the downtrend line. So you'd have $3 of risk from 43 back to 40 and targeting new highs in GM. I like that trade. Okay, let's see. Lastly, I wanted to, I know I bombarded you guys yesterday with trade updates. I mean, just one after the other. I thought yesterday was a great opportunity to book some profits, stay long and roll higher, keeping the positions open that were working. What I've done is, this is all the activity from December. And what I did was pull out the open positions and then group them down here below. I'm not going to go through every one. You can see we took new positions in GDX. We got a nice red to green yesterday in GDX. I was hoping that was gonna be a good buy on dip. We looking way out a year into 2022 with leap calls, and just let that thing grind away. And once the trade starts to work, at least this is the plan, I want to sell, kind of far out of the money calls against that core position and kind of gather some premium as time rolls along and just kind of roll that thing higher as it goes. Took a short position in TLT on the break of 154 to the downside. And then the other ones were roll-ups. Yeah, and we closed out a couple things too. Expedia, actually caught that right near the top, and it's pulled back nicely. I'm looking to get long Expedia again out in February, so look for that one. And also, we rolled higher on Papa John's here, pizza. Now that had a pullback in that sell-off yesterday, so that may be something that, although I don't normally like to add to something that's down, if it can start moving back up, might do a little trade adjustment there on pizza. I really like that chart setup. Trades that are in trouble, Las Vegas Sands has to go. It has to go right now. We're down on that one. And I'd like to see some follow through on the MJ pot cannabis sector ETF, and this Bally is probably toast. To be honest with you, it's going to be dead. But we did get some nice follow through on some of these other ones that we had open. So here's where we're at on our position summary. And I will continue to add to that and certainly post you, send you out emails on anything that I do today. So, okay. So that's where we stand this morning. Continue to watch your levels. I think the reflation trade is still in business. Looking for follow through now. And watch the FANG names for weakness. I know there's a lot of, debates out there. Is FANG dead? Does everybody gonna quit, tech? We don't need to participate in those discussions. Don't let that trouble your mind. We've got the charts right in front of us. We will see the turn. We will know if weakness persists or if strength comes in. And I'm not afraid to get, back long big cap tech if it turns around. But for right now, we saw that in all the names, aside from Tesla, all the RSI and all the PPO and all the price action says lower. So look for places to fade the rips, not buy the dips. Once it turns, if it does, then we can go into bull mode and get back on board a recovery in FANG. But for right now, that's not the place to be. The place to be is in small caps, cyclicals, value, energy, banks. And I have a bunch of setups for you that I will be getting to you today. So if you're new to the channel, why don't you go over to the show notes and register for my content, subscribe to the YouTube channel, and that way you'll get all those setups that I'm going to forward today, if you're looking to add exposure on the long side in the value cyclical space. And I may even have a few shorts in there on some high flyers that have rolled over. So anyways, I hope you enjoyed the content. Thank you for spending time in the morning here with me. I think if you can set up your levels early, have a game plan heading into the day, there's much less chance of you getting flustered, in your active trading sequence. If you trust the levels, if you know where your reaction points are going to be, and then having that game plan sketched out after the bell opens, and then just react to the price against your particular levels, whether that's long or short. So have a good day of trading. Let's wrap it up here. This has been Chris Buss with Traders Profit Compass. Talk to you later.